Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to be showing you some option strategies as well as some stocks that can be used if you're trading with an account around $4,000. Most importantly, I'm going to go ahead and show you how to use these strategies and these stocks in order for you to make consistent income. Now, if you're new to options trading or you're trying to use options in order to make some additional income, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be walking you through option strategies and stocks. I'm going to give you a detailed walkthrough of how to use these stocks coupled with these option strategies and show you how to go ahead using a $4,000 account or below in order for you to go ahead and make consistent income. Now, for today's video, we're going to go ahead and we're going to be using micron technology. You guys know how we just like to go and get down and dirty right away with options. Now, before I go ahead and continue with this strategy, I want to ask you guys a question. Do you guys know how to find out where the expected price is going to be at a certain date? The reason why I ask is that if you know or you have some idea where the price is going to be at a certain date, this is going to increase your odds of the trade going in your favor. So go ahead and let me know in the comments below if you guys know how to find the expected price. If not, depends on your response. I can always go ahead and make a video, and that's probably most likely is going to help you guys out. So let's go ahead and go down to trade MU options right now in order for us to go ahead and open up the option chain. Now, for those of you new to the channel and for those of you new to options trading, this information down here in its entirety is what's known as the options chain. What the option chain does is that it gives you enough information in order for you to go ahead and make an informed decision before entering any options contract. Now, speaking of entering into options contract, before we go ahead, I want to ask you guys to do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. The second favor is going to be always make sure to have an exit strategy. That way, if the trade do decide to go against you, then at least you know how to get out of the trade. Okay, so the featured stock for today is going to be Micron Technology, which is one of my favorite stocks to trade, and that ticker is going to be MU. Now, for this first option strategy, we're going to go ahead to buy and we're going to go to call. When trading with an account around $4,000 or below, you're going to need to get out of your comfort zone. You need to involve in some option strategies that's going to boost your portfolio. This does not mean that you need to go a bit crazy. So I'm going to go ahead and show you an option strategy that you may want to consider. So we're going to go to buy, we're going to go to call, and then now we're going to go ahead, we're going to choose our expiration date. The expiration date I will be going with is going to be, let's go with June 18th, 2026. Now, if you look right here, you could see with this expiration date, we have about 330 days to expiration, which is roughly about 1 year to expiration. Now, this is intentional for this option strategy to work. So now you have buy and you have call and you have a year expiration. Now you're going to go ahead and select your strike price. The strike price I will be going with is going to be the $100 strike price. Now, I did ask you before if you guys know or have an idea where the expected price is going to be. I have some idea where it's going to be around that date. So hence, I'm choosing the $100 strike price. Now, this is a buy option strategy. So because it's a buy option strategy, we're going to have to pay. The amount we're going to have to pay is going to be right here. It's going to be $24.90. Now, that is options world. In the real world, this $24.90 is going to translate to $2,490. The reason for that is that every single option contract does contain 100 shares. So you simply multiply your $24.90 by 100, and that should give you $2,490. Now, we're going to go ahead, we're going to click into this. Now, this first option strategy, which is going to help you with a small account and also go ahead and help you make consistent income, is what's known as the long call. Now, the reason why you want to get a long call is going to serve as a basis to be used as collateral in order to go ahead and do the other options I will present to you today. Now, by doing this option strategy, you're going to be using around, let's say, $2,500 of your $4,000. So that's probably going to be around 60% of your portfolio. So you still have 40% left over in cash if you choose to do some other option strategies. If you only want to use 60% of your cash, then you could stop right here. For those of you that want to go ahead and do some other strategies and use some more of that $4,000, then stay to the end of the video. As soon as I get done with this one, I'm going to show you how to utilize some more of your cash. So now we have this long call in our portfolio. That is just the basis in order for us to go ahead and do the second option strategy. The second option strategy we're going to do, let's go ahead and do that right now. So now your portfolio is down $2,500. So now we're going to go ahead, we're going to change the parameters to the top. We're now going to be going with sell and we're going to be going with call. Now we're going to go ahead and choose our strike date. The strike date I will be going with is going to be August 22nd. And the reason for that is that it's going to give me around 30 days to expiration, or monthly. I like doing monthlies because it gives you more consistency and it gives you enough time in order to outweigh all the volatility in the stock market. So now we have sell and we have call. We have our monthly expiration date. Now we're going to go ahead and choose our strike price. In this case, we're going to go ahead and choose a strike price above the current share price. Now, if you are new to options, here's a good place to start. Try to start off at a chance of profit of around 80%. That's a pretty solid start right there. If you risk adverse, then feel free to go up higher and increase your chance of profit. And if you like to take a lot of risk, then you could feel free to go down. Remember, the only person that's going to know the best thing for your portfolio is always going to be you. So just for the purposes of this video, we're going to be choosing the $118 strike price. And the reason for the $118 strike price is because it coincides with around an 80% chance of profit. Now we're going to go ahead, we're going to click into that bid price right here. Now, this is what's known as a covered call option strategy. The covered call option strategy is going to be an income generating option strategy. I did promise you I'll show you how to make consistent income. As soon as you go ahead and do this option strategy, which is the covered call, you're going to be paid. The amount you're going to be paid is going to be $2.12. In the real world, that's going to translate to $212. Once again, you multiply this amount here by 100 shares, which each contract to contain. Now, the criteria for you to be able to do a covered call, you must be able to meet two criteria. The first one is you need to own the stock 100 shares. You need to own the stock outright. Criteria number two, you need to be able to control 100 shares of the stock. So the prelude to this option strategy, I showed you how to buy a long call. A long call is an additional option strategy which allows you to control 100 shares. Now, why would you want to control 100 shares instead of buy 100 shares outright? Well, the answer is simple. It's because you're working with a small account portfolio. Remember, we're doing this video for account portfolios of 4,000 and below. If you were to go ahead and try to buy 100 shares of Micron right now, it would cost you $109.46. So you have to pay around $10,900 in order to own 100 shares. By using the long call option strategy, you're now able to control 100 shares with a lot less, and that's going to allow you to go ahead and do this covered call option strategy in order for you to get consistent income. So investors and future investors, that is the first option strategy and the first stock I would consider using if I'm trading with an account of $4,000 or below. So just to do a quick recap, that's going to be a long call in order to use that as collateral. And then you could go ahead and use that long call to do monthly covered calls to make consistent income. Now, remember, always do your own due diligence. Maybe you don't want to use Micron, you want to use something else. It does not matter what you wanted to use. Just make sure to do your own due diligence before investing. Now, I did say you're only going to be using around 60% of your portfolio. So you do have 40% in cash. For those of you that want to use some more of your portfolio, here's another stock you could use and also an additional option strategy that can be used. Now let's go ahead and change up the stock. We're going to be using SOUN AI, or that ticker is SOUN. Okay, so here we are on SOUN AI, and we're going to go ahead and go into trade SOUN AI options in order for us to open up the option chain once again. Now, I may not have mentioned this before, but I'm going to tell you guys this, especially if you're new to options trading. There's only one sure way in order for you to learn options, and that is to practice, practice, practice. It doesn't really matter how many videos you look at or how much you paper trade. You need to get in there and get down and dirty with options. That way you're going to learn how to do this way better, way faster. Now that we have SOUN open and we have the options chain open, this is the option strategy that I would consider if I'm trading with a small account of $4,000. So we're going to go ahead to sell right now. We're going to go to put, and now we're going to change our strike date once again. We're going to be going with August 22nd. We're going to be doing monthlies on this one as well. So we're going to use 30 days to expiration. Now I'm going to go ahead and choose my strike price. The strike price I'll be going with is going to be below my current share price of $11.65, and that price I'm going to choose is going to be the $10 strike price right here. Now, with the $10 strike price right here, I'm going to be paid because this one too is an income generating option strategy. This one is also going to allow you to make consistent income. The amount of money I'm going to get paid when I do this option strategy is going to be 0.54, or in the real world, that's going to work out to be $54. Now, this option strategy is going to be known as the cash secured put. The cash secured put is a beginner friendly option strategy, and it's an income generating option strategy. So it's a 2-for-1 you get right away. Now, in order for you to do this option strategy, the cash secured put, you would need to leave a collateral. The collateral you're going to need to leave is going to be, in this case, is going to be $1,000. So it's always going to be whatever your strike price is multiplied by 100 shares. Hence, we got $1,000. So now, if you do decide to do this option strategy, now you're going to be using 2,500 from the first stock, then 1,000 from this stock. So now you're using 3,500 of your $4,000, which still leaves you with $500 in your portfolio. Now, the reason why you want to leave cash in your portfolio at all times is several reasons actually. The number one reason is you want to leave cash in your portfolio in case of any emergency or in case you need to close out these trades. These are income generating option strategies. So if you need to close the trades, you're always going to have to pay back some of the money you gain to the market in order to close out these trades. Also, if you are trading with a margin account, because if you're trading with an account of $4,000 or below, that means you are able to use margin. If you are trading with a margin account, you will definitely need to leave cash in your account equivalent to the amount you're using of margin, just in case. If you don't leave enough cash in your portfolio, then you may be in trouble of getting a margin call. Now, right now, I'm not using any margin. That's why I could leave my portfolio balance as low as I possibly want. Okay, so back to the strategy. So the cash secured put, I was saying, once you go ahead and do it, you're going to be receiving income. The income you're going to be receiving is around $52, $54. You could go ahead and do this option strategy on a monthly basis as long as the strategy keeps working. And that's going to enable you to get consistent income. Now, the way this strategy could go against you is that come expiration date of August 22nd, if this share price right here, which is $11.70, happens to go below your $10 strike price, then the trade is going to go against you, but it's still fine. What's going to happen is that now you're going to have to own 100 shares of SOUN AI, but you're going to own it now at $10 per share instead of almost $12 per share. So that's a win for you. The other win for you is that you're going to get to keep your $52 right here. Hence, you make consistent income. Now, these are the two option strategies that I would be using if I was trading with an account of $4,000 or below, and I would highly consider using these two stocks. Now, remember, once again, always make sure to do your own due diligence before investing. The stocks of choice I have here is what I would use if I was trading with that size account. Always make sure to use stocks in your portfolio that you do not mind owning in your portfolio. That way, if the trade goes against you, you do get a stock that you already wanted to own in your portfolio at a reduced price. Hence, this is an amazing option strategy. That's why it's so beginner friendly. Now, for all you investors and future investors out there, let me know. I think there's one last video I could make with this, and that would be option strategies for a count of $5,000 and below. If you guys want me to go ahead and make that last video in this series, just let me know in the comments below. Now, those of you that made it to the end of this video, you guys are the real investors and future investors. Remember, if you haven't already, remember to subscribe so you could get my live videos once a week, live trading. Now, for those of you that haven't liked the video yet, now would be the opportune moment to go ahead and do that. Remember, subscribe to the channel. Hit the notification bell to get an alert when I post a video. But most importantly, if there's someone out there you know struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. I put out this free content in order for me to try to help as many people as I possibly can go ahead and make income from options trading. So together, by sharing this information, it's going to give them a start. Now, until the next video, keep pushing your investments.